Well, good afternoon, everybody. It's 1 o'clock on October 2nd. We've made our way into the last quarter of the year and the last month of the fiscal year for the financial system in Canada. So we are starting to get ready for that. September turned out to be a fantastic month. We've not had many of those Septembers. A lot of things went up, a lot of noise still in the world, geopolitical, interest rates, inflation, etc. But it turned out to be a pretty successful September in the markets. So I want to just give you an update. We're recording this, as I say, on at 1 o'clock on the 2nd. So anything that happens between now and then we'll comment on next week. But I am here on my own today, as you'll see. So going to jump in, go through the charts, maybe expand a little bit on just what I see happening and some of the events that I think could happen over the next little while. But without further ado, we're just going to jump into the charts of the day today, and then we can get started on providing more details around what's going on there. So we will put this on the screen. All right, as I say, recording on October 2nd. As always, the opinions here do not necessarily reflect those of National Bank Financial. You have any questions, certainly feel free to reach out to myself or your advisor. So a lot of the things that I'm looking at, it's been interesting as we've ran through most of this year. Quite a volatile year at the start. When President Trump got in, we had big drawdown into April as the tariffs and such were put into place. That a lot of that moderated throughout the year, and now we're starting to head back towards the other end, where more tariffs and tax and such has been put into place here. But one of the more interesting points that I noticed in September was really just about sentiment. So you can look at sentiment in a lot of different ways. This is from our CIO office, National Bank Financial. Gives an update just on many of the things they look at, but momentum, volatility, breadth, which is just how many stocks are going up, risk appetite, speculation, which is the options futures market, and surveys. So this is a great feeling gauge to say how are people feeling about the markets in the world. So we're hitting around all-time highs in a lot of different indices, and it typically when we get to this, which we saw in you'll say February, April of this year, sorry, February, March of this year, is we saw extreme optimism. So we're tilting towards, we had a new leadership, Republican, a number of things that could change from a positive side. We start to tilt over towards the right-hand side here. And this has hovered around the 60 for most of September, which is quite surprising given the markets touching new highs. Usually we move towards extreme optimism. And so as this market's been climbing this wall of worry, we've been sitting in this range of 60 or so for quite some time, which leads me to believe potentially there's some upside still ahead in the markets. Some of the other, I think, key indicators, which we know we usually talk about interest rates and inflation, and I'll certainly comment on them, but I think this is a great gauge to look at the risk off, risk on time frame. And these are financial in nature, so this is our team's look at it. And so on a risk on perspective, so we'll say cyclical conditions. So this would monitor business cycles. So this would be how's the economy doing? What's the expectation for what the economy is going to do? Then you look at the US economy, jobs, manufacturing, housing, that's neutral today. Global economy actually starting to show some positive signs of life. And in here, they'd look at growth breadth. So again, how wide is the economy expanding? Manufacturing, economic surprises, so good and bad surprises that has an impact on how things are expected going forward. These are leading economic indicators. So this is what's happening out in front of us. So that's those are the key pieces then on the economy. From the other perspective is the financial markets. So on the financial market side of things, we'd be looking at equities, bonds, FX, and commodities. And so we'd look at all of these in varying levels and saying, where's the money flowing to in these different areas? And presently, as you see, we're in a risk-on environment there. Monetary conditions, quality of money, cost of money. So what are the central banks doing, policy rates, etc. So all of this is hovering around neutral. I'd argue that we're actually seeing some of these positive sentiments where we're starting to see money supply start to creep up again. M2, I think we commented on last week, which is M2 is the global money supply. So that's been kicking up to the upside, and that's historically been good for risk assets and equities. And then on the momentum side of things, also a great place to look and say, what's happening there? Global equities versus bonds momentum, extreme risk on, absolute momentum, extreme risk on, and then reversal risk, risk off. So watch for momentum overshoots versus macro conditions. So, these for me as an investor and someone that's been asked and tasked to manage your money and make decisions by trying to look around the corner to see what's happening in the markets. And this would be one that would cause me a bit of concern. We get real positive momentum, volatility low, that tends to lead to some economic or some market surprises that we need to be conscious of. So, does that mean taking some profits in certain areas that have done well, maybe precious metals, maybe looking at adding some long duration government bonds, maybe some puts through index insurance kind of thing? So, these would be some of the things I'd be thinking of. We look down on the risk off perspective, valuations are extremely expensive. Sentiment, as I said on the previous slide, pretty neutral at this point. And so just a comment on interest rates and inflation, because this is something and a key topic that we discuss, and I think really important from a perspective of what happens from here. And so if we look at this chart here, we get the 2 year and the 3 months. So a lot of the news and media's time is attention around what's the Bank of Canada doing. And so the Bank of Canada would be really in charge of the front end here. And so this would be the short part of the yield curve. So that's when everyone talks about what's the Bank of Canada doing, Bank of Canada rate, etc. So from 1 year ago, we're 151 basis or 1.51% lower than where we were last year. Similar as we stretch out a little bit on the 2 year there, still 49 basis points or 0.5% lower than where we were a year ago. And then as we start to move out to the 10 and the 30, those yields have actually gone up on the longer end. So that's an interesting perspective and conundrum to think about. What does that mean? Is there some risk to the economy? Why is the longer end moving up? So I think it's an important piece to pay attention to. So those are on the longer term in nature. From a month-to-date perspective, we saw Bank of Canada cut rates last month, so that came down 21 basis points, effectively the whole 25 that we were expecting. And the 2 year that has also come down on the short term. And I think these will be key things to watch as we have a meeting upcoming at the end of October, October 29th, which lines up with the US as well. And so then if we fast forward down to the US rates, so that again, this would be what the Financial Open Market Committee or the US Central Bank controls, which is the front end, is 1 year ago, we're down 67 basis points from where we were, or 0.67%. On the front end, this has mostly to do with the bank cutting last month. And then if we look at what is likely to transpire from here, I think the most interesting piece for me was looking as we've seen the 2 year slightly bump up on that news. And coming into the meeting, we actually anticipated that they were not going to cut rates. And then they had weak employment numbers and they decided to proceed with rate cuts. We anticipate another 2 cuts in the US as well. So I'd be watching these areas as key pieces to look at. Then if we zip out to the rest of the world, I think one of the more important pieces that I follow would be Japanese bonds. And it's one of those cases where, Japan's been in a period of zero interest rates for decades. There's been pretty much every hedge fund in the world have gone to Japan, borrowed money for free, gone back into US dollars, and had the ability to have a lot of leverage with a zero cost of borrowing for that leverage, and they could hedge out most of the currency risk. And now we're seeing the other happen, which is yields have started to rise there. And if you look here, this is the biggest rise that we've seen in bonds in Japan in a very long time. So 82 basis points off of 164. So you're talking about a doubling of the 10-year Japanese bond in a year. So that's a huge move up. And so anyone that was long Japanese bonds at that point has lost a significant amount of their money. 50% effectively over that period. So these would be some of the things that I'd be looking at. We do think inflation's still tame. We think the economy is slowing, but easier financial conditions is going to be a tailwind and a support for the economy, probably the next quarter or two. And so we'd be watching that quite closely at this point. As always, I say the opinions expressed do not necessarily reflect those of National Bank Financial. Should you have any questions, please feel free to reach out to myself or your advisor. Everyone has their own risk tolerances and view, but thanks so much for watching the charts of the day today. And so I'd say, what am I looking at? What's coming ahead? Just finished a client meeting as well. We're talking about what do you anticipate for the next 12 months? It's always a great question and always something that I think about. But my immediate thoughts are we've had nice returns in most assets. So where should I be looking at trimming? And as I've mentioned in the last previous calls, I do think precious metals has had a good run. Geopolitical sentiment is a big reason for that. Many other ones you could point to resulting in that. So I'd be looking at that as an area of trimming, maybe reducing risk there. Some of the other growthy areas have done quite well, so I'd be looking for opportunities to switch out there. Last week we talked about Stock Baxter International. There are a number of stocks out there that are starting to look attractive, maybe undervalued at this point, and the objective, as always, is to look for the companies that nobody likes, buy them, and then sell them when everyone's following and chasing them up. So we've benefited from doing that quite well in the past 12, 18 months. And now we're looking to reposition, take some profits, look for opportunities, and make some shifts there. As always, please feel free to watch and subscribe on YouTube. And we're happy to have any discussions, any meetings you want, any questions about anything we talk about. Feel free to reach out to Eva or I, and we're happy to comment and spend some time and give you an update on how the world's going. So thanks so much for joining me today. As always, have a great weekend and look forward to seeing you all next week. Take care. Bye for now.